your cross-section of the stock markets and of developments in the Zimbabwean economy. A beautiful evening it is to you. Welcome to the show as we broadcast live from our Hampton studios in Harare. I'm Ibn Mabunda. Let's get on to business. Our news tonight, the Zimbabwe Stock Exchange has extended the reporting date from the 31st of March to the 30th of April 2019. That's of course for listed companies. This comes in the face of considerations amidst concerns from listed companies with regards to the reporting currency. To jog your memory, on the 1st of October 2018, the central bank issued a statement that said that there had been a separation between the Nostro FCA accounts and the then surrogate currency, which was the bond. Effectively, the central bank also maintained parity between the bond and the surrogate currency. Fast forward to the 20th of February 2019, the central bank governor, Dr. John Magunjika, said that there was now disparity between the RTGS dollar and the US dollar, which at the initial stage traded at a rate of 1:2.5. As of the recent statistics, is trading at north of 2.76 against the dollar. Now that of course has brought controversy with regards to the reporting currency. Of note is the fact that the issue is still being discussed by the Public Accountants and Auditors Board as to establish which currency that the companies can actually report on. Of note is the fact that agro concern TSO Limited has already indicated that it will delay the release of its financial statements for the year ended 31 October 2018. Of note as well is the fact that Old Mutual Africa, which is parent to Old Mutual Zimbabwe, during the presentation of its financials, gave a statement that said that due to change in currency in Zimbabwe, they had to actually report the financials for the Old Mutual Zimbabwe at a rate of $1 to 3.3 RTGS in a bid to try and give a fairer presentation of the Old Mutual operations here in Zimbabwe. Meanwhile, Insco as well, Insco, Simbisa as well as National Foods have gone on to publish their financials in US dollar terms, which according to several analysts, we might actually expect a reassessment of the financials that they've actually published. In other news, London-listed Caledonia Mining, whose primary asset is Blanket Mine here in Zimbabwe, particularly Gwanda, has released financial results for the full year ended 31 December 2019. Well, 2018. Well, Caledonia's primary asset is Blanket Mine in Gwanda, in which it owns a 64% stake. According to the report, the revenue slumped 2% to US $68.4 million. Let's just have a quick look at the financial performance. In 2014, they recorded revenue of $59 million, which then slumped in 2015 to $49 million, 2016 $62 million, scaling up to $69.8 million. Then in 2018, there was a 2% dip there to $68.4 million. Also of note is the fact that there was also a growth in profit after tax from $11.9 million to $13.8 million in that regard. The gross profit declining 18% to $21.5 million due to lower production as well as higher production costs. Now, interesting detail here is the fact that the gold output actually slumped to 1.55 tons from 1.59 tons. Key as well to the financial reports is a statement issued by Steve Curtis, who is the chief executive, who made a comment on the operating macroeconomic setup that the corporation had to encounter. He says delays in procuring critical items meant that capital requirements suffered from a lack of maintenance, which increased the frequency of breakdowns. Then he also says policy changes disrupted the commercial banking system in October 2018 and February 2019, which adversely affected procurement. So the group is lamenting the macroeconomic conditions that they actually had to operate under. Resultantly, production costs were up 8.7% to 39.8 $31 million in 2018 compared to a level of $36.18 million recorded in the year 2017. Well, as I indicated, profit after tax also growing 15% to $10.7 million. Now, of note as well to the group is the fact that during the reporting year, the life expectancy of Blanket Mine was extended to 14 years. This was due, of course, to recent discoveries in the gold tonnage that the group actually has. So, well, according to the revision, they noticed that their reserves are about 860,000 ounces of gold, which then spells 14 years in that regard. Well, production is expected to skyrocket to about 80,000 ounces. Let's just have a quick look at the projected gold production, right? This is 2018 where they recorded just below 70,000 ounces. 2019 they where they recorded 1.59 tons from 1.55 tons recorded in the previous season. Now for 2021 they had projected a figure of 80,000 ounces, but that has since been revised downwards to 75,000, and the 80,000 figure is now projected for the year 2022. This being the effect of a harsh macroeconomic setup that the corporation had to operate under. Then in other news, Total Zimbabwe has issued a statement which gives us a bit of insight on the performance of the fuel sector in the country. It says, as an aftermath to Cyclone Idai, Total Zimbabwe says that fuel supplies will be affected over the next few weeks. But let's just have a quick look at the statement. It says here, following the devastating effect of Cyclone Idai experienced in Malawi, Mozambique and Zimbabwe, the fuel supply chain logistics into Zimbabwe has been adversely affected. Then it says, based on the information they have received, the following has since been established. Bullet 1 and Bullet 3. It says the jet in Beira has been damaged and Kent receives vessels of discharge. Okay, that's from abroad. And then it says the condition of pipeline from Beira to Zimbabwe is yet to be established and we will await NOIC update on the same. Then key statement would be, given the above, the stocks in tanks in Masasa may not be replenished in due time as required, and this is likely to put pressure on the supply chain. Zimbabwe demands every day supply of about 6 million liters. So if we look at this statement against the background that these guys have over 40 stations across the country, this could actually spell disaster. And I'm sure, as you've noticed, that the fuel queues are back, and it seems as though even the price in terms of public transport has actually gone up in terms of the commuter omnibuses. So it seems as though we are in for what could be a bit of a turbulent situation. For conversation on these and other issues, I'm joined in studio by our resident investment analyst, Aniso Chumbumu. He joins us soon after the break. Aniso, good evening and welcome to the show.
Thank you, Evan. How are you doing today?
Can't want to complain, should only get better. Yourself?
I'm all right today.
Beautiful. Let's cut to the chase. ZEC, they're issuing a statement that they've allowed an extension of the reporting period from the 31st of March to the 30th of April. What is the significance of that?
Well, it would only make sense anyway for them to do this, because if they had not done that, that would mean there were some penalties that most of these companies were going to have to face, because most of the companies are actually waiting on PAAB to actually issue out a statement as to how to go forward in terms of their reporting seasons. So with the irregularities that then most companies faced in the last quarter of 2018, then makes it an issue of them to actually try and revalue or go ahead with the 1:1 rate that was still at play at that time, or change it downwards to the rate of 1:2.5, or the rate that is prevailing at the current moment.
The statement from PAAB was expected a couple of days back, but it seems as though nothing has been released from their table yet.
Well, I would suppose that it's a very complicated situation. I mean, there are a lot of accounting standards that they have to consider, different standards that they have to make sure that they are abiding to and if they just change as to how they just do things, they then need to have a lot of consideration as to how to move with those things.
Yeah, because I think they find themselves in a conundrum where government said there was parity between the bond and the US dollar. At the same time, it seems as though with the monetary policy statement that then comes into effect, stating the 1:2.5, that sort of presents them with quite a complex situation, and they at the same time they must come up with a bold statement so that corporates can actually get to establish what's.
Yeah, we only need to see a good fair set of results. I mean, most of these companies really worked hard in 2018, and they were expecting very good numbers coming out of what they had done throughout the year. And if such changes are going to come into play, some may even face a little bit of a threat in terms of insolvency or try and file for bankruptcy. You never know how much of an impact it will have on some companies that were not performing as well prior to this. I mean, there are some companies that have very slim balance sheets. So with slim balance sheets then having to be a little bit more slimmed down now, it could put them in a place where they have more liabilities than assets, which then pretty much spells out some insolvency there.
Slim down, you said. Is that what we could expect?
Well, I can't really say. I wouldn't have much expertise as to how accounting standards go and the like. So if I had some knowledge as to how accounting standards do work and all of that, then I would give you some kind of direction probably.
I'm sure it's quite a quagmire for them as well.
Yes.
Moving on, London-listed Caledonia Mining releases financial statements, and in what seems to be a conflicted set of financial statements, in the sense that you have growth in terms of their profit after tax, while you have a decline in terms of revenue. I mean, over the period, almost all the companies have recorded growth in terms of revenue as well as in terms of volumes, but for Caledonia seems to be a different case. You have a dip in terms of revenue, you have a dip in terms of the volumes that they've actually pushed, particularly in terms of the tonnage, which is dipped from 1.59 tons in the previous reporting period, and now it's 1.55 tons. What is your interpretation of the setup that we have here?
Well, I like to think probably that they had a good set of results, because these guys were expecting a decline in their production numbers already, but then also it could spell out that the gold prices were doing a little bit well, but then again, 3/4 of their trading year, they probably had a good number of operational costs that they pretty much slimmed down at some point. I mean, they're also enjoying an export incentive system that was there, which pretty much serviced some of their costs here in Zimbabwe, because that export incentive was not much to do with them actually being able to use it outside of Zimbabwe, but then they could use it for other issues in Zimbabwe. So probably that cost was being covered by the export incentive compensation that they'd been getting prior to its expansion. expunging.
Okay, of note is the fact that their production costs were up 9% against the comparative period of which is 2017.
Well, most of that uptick is coming from the from the last quarter of the season. Like you rightly mentioned earlier on, that the CE did mention that some of the issues that they faced macroeconomically, it really pretty much pushed up their costs. Which is pretty much expected of most of these businesses, because I mean there was a separation of FCA accounts to RTGS accounts, which brought in a lot of confusion, and some production costs had to go up because there were some issues to do with availability of foreign currency actually in the country for them to actually have a simpler movement in terms of their the raw materials that they need and the like. So with the difference in terms of how they could actually access foreign currency at a rate that was not very clear at that time, it would definitely push up most of their costs.
Okay, but I think this is quite a fair performance considering how the sector itself has actually performed. You look at Falcon Gold, well, the story there hasn't been a good one. You also look at Rio Zim. I mean, it's been bumpy, it's been shady, and for them to actually have posted a growth in terms of the profit after tax, I think that's quite a significant performance. And I think if you can survive such testing times as they have actually operated in, then perhaps maybe
well they're even looking to expand. I mean, currently they had their central shaft was around about 1,200 meters deep, and they're actually looking to expand that, which also talks to the expansion of their life of mine, which has gone to 14 years. I mean, if we look at a couple of their graphs here in terms of how they've been producing, I mean, they're looking to go as high as about 80,000 ounces by the year 2022 now.
Yes.
Now, but before they had projected downwards, they were expecting that 80,000 tons to be met in 2021. Going forward, having a good number of ounces that they could mine. Now they have reduced that expectation. Even in this year, they had reduced to between about 54 and 56,000 ounces, which is pretty much the ballpark area that they actually played in. You'd also realize that regardless of the issues that they faced in the last quarter, they actually recorded a 7% growth on a quarter basis in terms of their production numbers. So yes, they did have an increase in their production numbers. I'll think that probably that was also linked to the increase in the ounces that they produced in the last quarter compared to the last one. And also the increase in the value of money in terms of how much they needed to purchase. So going forward, they have something that looks somewhat of a good future for them. They're looking at increasing that central shaft. They also have actually set a 5 months set price where they're going to be selling at nothing less than $1,250 in terms of their gold. So meaning that if prices do drop beyond 1,250, they're still safe. They could still sell their gold at 1,250 for the next 5 months. So going forward, they're still looking at good numbers. I mean, the gold price on a global scale has been coming off lately, much to do with a lot of uncertainty in terms of how Trump and the Chinese are actually going to be going forward in terms of how they trade. So there is a good future for the company going forward. An increase in their central shafts does tell me a lot.
Are you happy with?
Well, yes, with the grams per ton that they'll be expecting from how much they'll be producing, it does say a lot in terms of how it actually flatlines going forward from the time that they're expecting to do 80,000 ounces going forward. So it may be a little bit worrying that their production numbers may go up, but yet the quality of the milling is not going to be as good, or is not going to increase but then the chances of them actually getting more out of more ounces is there, but then the quality of the meal that they're going to be getting isn't really much going to change according to their projection currently.
I realize. Now on to an interesting development here. This is a buzz across the country on various media platforms, and people are very much concerned about our fuel supplies. Fuel queues have resurfaced.
Well, they've pretty much been there.
Yeah, but I mean they're sort of scaled up, so to say.
Okay, all right. Yeah,
yeah, but so this is the situation. Cyclone Idai has affected the supplies across the country, but I'm not sure as to whether this is something that would be unique to total Zimbabwe, or this could be something that's across the board.
I think it could actually touch across the board, because the issues that are not non-consequent to what the government has actually said, which is pretty much the NOIC statement as to how the pipeline was affected or not affected. These are issues that still do affect, because Beira being a port where fuel then comes in is also under the water currently, and it's pretty much a very worrying situation. There was an article today that I read that mentioned that we've got about 4 weeks to go with the fuel supply that we currently have. I do not know how much more it is, how much less that timeline is going to go when people start panicking around about how to actually secure the fuel. Because I mean, in the past we've witnessed such kind of panic kind of complications where a lot of people end up just buying a lot of fuel because of how they anticipate the lack of the fuel in the future. So the 4 weeks can actually slim down. You never know.
Okay.
But non-consequent to the government, it should be something that should touch across the board.
Well, thank you, Aneso, for the insights. Thank you, viewers, for watching. Please stay tuned. Up next is the stock markets.
Welcome back, viewers, on Money Markets on Equity Access. I'm joined in studio by our chief analyst, Respect Benzi. Good evening, Respect.
Thank you, and welcome, viewers.
Now, on to it straight. The stock market seemed to have been a very damp day again today. What would be your take with that 0.83% scale down by the all-share index, also by 0.85% scale down by the industrials index to 419.93 points there?
I think we're in a sustained loss position. These are losses that began over the past few weeks. In fact, I could say from midway into Feb, just ahead of the MPS, and it's safe for us to now call this a market free fall, and the losses have been quite sustained despite demand coming in here and there. But we can safely say the market is in a free fall mode. I think it's wise for us to possibly zoom out a bit before we get back to today's particular movements, to say what could have been the possible drivers of such a performance. My take would be that there was a bit of positioning ahead of the MPS. Of course, investors have got different expectations, but there wasn't any clarity or any sure move to say when the MPS is released, we are either going to have an outright currency or we're going to have a partial float and whatnot. So it's always been safe for investors to park their money into investments that have got a higher hedge in terms of inflation. So demand was firm prior to the MPS. But just a week into, in fact, a week before the MPS, we started to see a bit of a sell-off.
Okay.
I think it's also the part of investors who believed that there could be a total currency shift that would come with a pure liberalization. What that would have done is to allow for investors to push their money easily. But we get into post-MPS trades, we find ourselves hanging in a partial liberalization market. And those who had moved their money cannot continue to move it out. In fact, there has been limitations because of lack of forex. But on the other hand, we find a group of investors who had taken position due to the fact that they were afraid of a hard landing. And now there's no hard landing. There's a bit of a managed situation where the going rate is within is below the parallel market exchange rate. Because some could expect that if there was an outright liberalization, then the exchange rate might go even beyond 5 or beyond the parallel market exchange rate. So parking their monies in stocks would have made sense. But now that there is no hard landing and the market rate seems to be below the parallel exchange rate, they are reversing now because they also need cash flows. So it's not an entire body of long-term investors. It's a mixture of long-term investors coupled with speculative players. It's just like me and you trying to preserve the money, but it's not money that's meant to be utilized in 20 years time, or it's not money that's meant to be invested or in a way. So I think those are some of the situations that we were facing. But notably, I want to believe that the depth of these losses show us something beyond the short-term mechanics of the market. I believe if we are to stretch further, 2018 market goes up sharply. 2017 we also had some huge gains on the market, and the market had become overly priced. From heavy caps to mid-tier and small caps. There's been some very huge jumps in prices as people look for a hedge. And so now we are seeing an unraveling of all of that overpricing. I believe people, investors are of the view that inflation might slow down. It might not grow at the faster rates at which it was growing in prior months. So that also could be inspiring degrading in terms of value. And I also believe we are in the earnings season. 2018 was good, but 2019 is not going to be very good. Yeah, demand is expected to come off the effect of 2% tax and whatnot. So I believe these factors combined, they're resulting in a loss of value in terms of stocks. I think this is what has inspired this decline.
I would really beg to ask the question that if we were to adjust the stock market right now at the US dollar rate, would it still be overvalued, or are we in a position where we would talk about an undervalued stock market there?
The valuation of stocks never goes away because we have re-rated. Because once you re-rate the market, it means you are multiplying by a certain factor. So if you re-rate, it means your earnings are up by 2 point something. But when you value now, it's a function of price to it's a function of price over earnings. And the market price is surely they would be significantly lower than the revenue. So I think it's a sure factor to then say it brings down the PEs, so it also brings down the valuation issue. So I think it's not fair to price a stock in USD and then to price the earnings in RTGS.
Yes,
Yeah, but moving on to today's performance, sustained losses in heavy caps. Your usual suspects, the biggest counters on board, Econet, Cassava, coming off sustainably. In fact, Econet is down 23% on a year-to-date basis, and its sister Cassava is down by 23%. But I think one of the key interesting movers in today's session was actually Padinga. This is again a day-on-day gain. It is one of in fact, the only counter among the top 10 which has shown growth on a year-to-date basis.
Yes.
And I think minus Old Mutual and Citco International, these are actually the three counters, Old Mutual, Citco International and Padinga, which are diversified from the Zim market. And it's a very interesting phenomena to find people moving their monies into such safer stocks. Yeah. So for the day, Old Mutual marginally recovered, going up 3.15%.
But Econet really did take a very deep dive right there, coming off 8%. So that we just look at our rises and fallers before we do, our 5-day trend actually has pretty much widened. We have 5.77% decline in our all-share index, 5.83 in our industrials index. The minings index is seems to still be holding on. It seems like 6 sessions straight now on a stable movement. Your top 10 index is down 7.7%. For our rises and fallers of the day, we had about 5 rises and 6 fallers. Of the 5, the leading bull of the day was CBZ, coming up 6.38% for it to settle at 15 cents.
I'm sure CBZ was also a riser in yesterday's session.
Yes, it actually it was a marginal increase.
And I think it's interesting now, ahead of what the ZSC says to be an extension of earnings release. CBZ is one of the most watched counters as well.
Yes.
But there seems to be an issue to do with how the market values CBZ. There's always been an issue of tending to underprice when you look at the relative valuations of other counters which are in the same sector. And that's really a concern to the company. But there are definitely issues. CBZ has a government hand in it, and investors tend to be a bit skeptical
about that. Yes.
Yeah, but they have made significant progress over the past years. Ironed out some shareholder concerns, and they've brought in brought in a new CE, and I believe the team is geared to try to change the course of operations. But issues to do with loans, there has always been an issue. It's always an issue, and investors believe CBZ has a tendency to understate their NPLs and whatnot. But I personally am confident that they are on a new path, and we might start to see a revised perspective in terms of how investors view the company on the outset.
All right.
I think moving on to other risers, we mentioned Old Mutual, Padinga. Simbisa released results 2 weeks ago. Firm earnings on an USD basis.
Yes. That might be revalued, right?
Yeah, there might be a revaluation depending on which side of the coin.
PAB falls. Yes.
Sure. And we've got Delta, they're capping the top 5 risers. But generally, I think heavy caps are the ones that
have the drag.
That have dented the market lately, and it also shows that significant amounts of monies were parked in heavy caps, and heavy caps were rising at a faster rate than the rest of the market, which is exactly what's shown here to say if the ZSC top 10 went down by 7.7, whereas the other side of the market is down by just 5.77. it means the weight is on that end, and there has been a huge sell-off on that side ahead of the broader market.
Yes,
yeah.
yes.
Moving on to fallers, you can take us on.
Econet, we already spoke about those guys. But then, of interesting note for me today is Dairyboard. Yesterday, they had an analyst briefing. They actually added about 0.14% on their share price in the prior session. Now they've actually pretty much let go of those gains from yesterday by coming up 5.41% to 14 cents. Now these guys have a gearing ratio of around about 7%. Their cover is at about 2.4 times, and I mean they've got a very healthy balance sheet right there. I mean there's a lot of potential to grow.
Yeah, but I think before an investor looks at how healthy the balance sheet is, I think they're concerned with the earnings growth.
Yes.
If you really look at how the earnings were constructed in terms of what drove growth, these were basically price increases.
Yes.
In the second half period of the year. But suffice to say, prices could have held at prior first half levels. I don't believe that Dairyboard would have moved up in terms of revenue. Why so? If you look at the growth in actual volumes, it wasn't anything serious.
But the milk section grew by about 9%. Their beverages did grow about 33%, and even though their food business was down a little bit, maybe about 11% thereabout. Why would you say the growth?
The aggregate volumes growth was just about 6% thereabout. So if you're looking at that kind of growth in a year like 2018, I wouldn't believe that there's so much growth potential in that counter, because we all had money to spend before the prices were increased. But I think maybe in the last part of the year, as they repriced most of their product, obviously demand was coming off. But I don't want to believe that if demand came off in the final quarter of the year, then you are likely to see a recovery in 2019, whereas your prices are already up and they're likely to even go up, and the consumer spend is supposed to come down.
Yes.
So if you're not going to affect more price increases, then I don't see how your revenue is going to grow. And this is a company which is expecting 40 to 50% increase in revenue. I think that's really
it's a very bold,
far-fetched. So it might speak to the decline in today's performance, to say, where is the growth going to come from? Is there going to be demand, double-digit demand or volumes growth? Most investors might find it difficult to see how that growth consummate, and I believe that's why there is that fall. We see Mikos, after issuing a cautionary statement saying discussions are ongoing regards the disposal of some of their hotel properties. Yes. I think this refers to Cape Grace. It's been hanging for quite a long time, and
there seems to be a little bit of contention between the shareholders and the management.
Every time investors get to hear of Cape Grace, they're spooked in one way or the other, and it might have. But the decline was quite marginal, and I'm sure there's also issues to do with some of their farming operations in Chipinge, marginal affected. But I think notably there's the issue to do with how their crop portfolio is arranged at Tanganda. They have tea, which is the major crop, accounting for more than 70% of the revenue. Then they have macadamia and avocado. So avocado and macadamia were still small crops. Of course, they were harvesting them, but they were not yet mature. They still needed 2 more years. Within 2 years, they would start accounting for a good share of the portfolio's revenue contribution. But they were still in that infancy levels, although they were still.
Have they really mentioned how much of an effect?
That's what I'm trying to get to say. If these were not yet fully up there, it means their contribution as well to the overall group performance is very. In fact, the Tanganda operations, it would be very, very marginal. It's unlike the Ariston operation, where you find a fully mature macadamia,
crop of macadamia,
and
yes.
of course an emerging avocado as well. And obviously, if these are to be affected on a gross scale, then that might result in a disturbance in terms of their earnings. So both haven't yet come out to say we have received. I mean, the extent of the damage was this far, and I believe it's not fair enough for us to speculate. But I don't think there was some serious effect. I had a chat with one of the CEs and of course a senior executive at one of the companies. Right now it seems there might be control of operations.
All right, just to round off, like I said, Econet was leading that pack. Axia trailed by coming off 7.5%. Dairy, but we've already spoken about those. Cassava also dropped about 0.97% for it to settle at 110.02 cents, while Meikles settled at 49.12 cents. Now, the much-awaited tobacco season did start yesterday, and there was much speculation about how the floors being open can actually cause some shifts in the foreign currency market there. But then there seems to have been an issue. That was then a statement that was released, much to say that your contract farmers are going to be getting an RTGS dollar value and then probably get their 55%.
So who are the contracted farmers? Who are these farmers?
I mean, that's your Northern Tobacco, your ZTF.
So are they the ones who are supposed to be credited by the RBZ and RTGS, or they are saying the people who are contracted by contract
by contractors,
by merchants, they are the ones who are supposed to get local money? Because a merchant avails money in USD terms. They invest in Zim after pulling monies offshore.
Yes.
And so they're bringing in foreign currency to buy, as well as to fund the contract farming.
Yes.
So as part of their agreement, they say we are going to pay you so much in terms of your produce according to market price, which is priced in US. And now comes RBZ, which is the regulator, and they say, of course we have received your monies from the merchant, but we are going to credit you the full amount of your produce into your RTGS account at the prevailing market rate. You can source Forex on your own. I think this is really a game-changing statement, especially coming just before flows opened the day before yesterday.
Yes.
Why so? Because you are subjecting the farmer to some inefficiencies in the market. Presently, we don't yet know the availability of cash at any given point. Of course, it's encouraging that the rate is moving up, which shows that there might be a bit of trades here and there, but we still need the full disclosure to say
on volumes.
There is sufficient money at market levels that are determined by the market itself. This is the only thing that can give guarantee to the farmer to say, if you sell at the market rate on this day, if you sell your produce on this day, you still get your monies on that very day using the market rate. I think that's the challenge farmers are facing right now. And some of them might not even want to be keeping USD dollars per se, but they would want a fairer rate. They would want, if I was a farmer, I would want to burn my money on the black market. So this is also a way of pushing tobacco contractors into the normal banking channels to say, if you give them USD, they'll withdraw the USD and take the money to the black market rate, which is operating at 3.5, and they will sell their money and they are richer. Other than if we give them local money and we say buy on the interbank rate. So I think these are some of the games that
we are yet to see how contract farmers are going to really react. I mean, they haven't really come onto the floors yet, but then the rest of the farming team actually did sell about 3,800 tons today, with the price of about $1.83, which is about 17% down from the prior year.
Yeah, I
at the
think
same
this
time.
year we were affected in terms of our quality by the nature or the level of the rainfall.
Yes,
So volumes are likely to be lower than last year, and even the quality of the produce as well is likely to be below last year. But I think it's too early for us to really gauge the depth of quality. I think that's what informs the average price per barrel. But I think it's really interesting that interbank rate closed at 2.9
today,
now moving towards 3. But I don't seem to see the convergence here, because the more the rate is going up on the interbank, the more it's also rising on the exchange, on the parallel market. We might not see convergence up until a point RBZ starts to release volumes of trades, because as it is, there's a lot of inefficiencies and a lot of suspicions to say, what if that interbank market is not real? What if it's RBZ which is pumping the money and so forth? So once there is transparency, then before that we are not likely to see.
Yeah, because the marginality is pretty much still the same ever since the second week.
But what does it then mean to an importer? Because you're an importer.
Yes.
You are producing goods in Zimbabwe, but you want raw materials from outside.
Yes.
So if the rate goes up, what does it mean to your produce? What does it mean to your price? What does it mean to inflation?
Well, definitely I'm going to push up my price, because I need to cover for that cost of me actually getting the US dollar. That's going to basically mean inflation is going to go up. Yes, some people may expect inflation not to go up as quickly as it was going in the prior months. It may slow down, yes, but then I still expect a very huge number in terms of our inflation numbers going forward into the year.
Sure, I agree with you.
So with these kind of irregularities and inefficiencies in the forex market, it's going to still keep a lot of traders in a place of speculation, where they would find themselves trying to hedge themselves against a much later cost that may come into play, not knowing how the interbank rate is going to perform and how the RBZ is actually trading on that market. I mean, we don't really know how much is being traded on in terms of volumes. So that's one aspect of how a market rate actually works. Is there supply? Is there demand? So with that being said, it's still a tricky situation without having enough information how the RBZ is actually trading here. And if this continues, I may expect some speculative price increments there.
Thank you, Anisu, and thank you, viewers.
Yes, from me and respect, that's about it. Do follow us, like and subscribe our YouTube, Twitter, and Facebook accounts, Equity Access, and do visit our website www.equityaccess.net. Good night.